Yeah. So, as you will find in the document, this is the strategy to follow your reversal strategy, which is again the pivot, what to use. Here you find the camera one, do the camera one, pivot says auto. You can do 5, you can do 15. I like to do 15 because I like to go back. You can use the daily base values. This is good. And we don't need these other lines. Sometimes it can help you to keep the midline, uh, gives you perspective of what the market where the market midline is. But yeah, you can do that, no issues. But I don't really keep it too much because I like to see it because it's reversal. There is no point in doing the midpoint. Either it is up or down. We're just trading from those levels. Do the green one, do this green, do this red, and then click them, and that should print a good chart for you. Keep the volume is good, and keep the volume MA. So the volume MA is important. Maybe do it white, do it so that will help you help us understand the market volume pattern as well. And on the divergences part, and I'm not completely disregarding it. I'm just keeping the divergence of, let's say, MACD and RSI, which are the key two indicators people follow. Everything else I'm removing. Keeping the chart clean is more important. Show divergence line turn off. So like any other thing that is turned on, turn it off. Just MACD and RSI, keep it. And yeah, positive is you can change them to red and green as well. So positive and negative divergence, just to be more accurate. In any case, that's all our indicators, and this is the just normal RSI 14, SMA is 14 chart. It stays the same. If you open the chart at 15-minute time frame, it will give you the intraday levels. So these, whatever it is printed here, are intraday levels. As soon as you change the time frame to 30-minute, you will find weekly time frame. So 4 hour through a 30-minute, it will give you weekly pivot levels. It is automatically calculated. When you go to the daily time frame, it will give you the monthly pivot levels. So that's how it works. In this case, we are opened on 15-minute, and as you can see, it's a 24-hour thing. The levels stay for the 24 hours, and based on that volatility and the previous 15-bar volatility, it will create a new pattern as soon as the day shifts. So that's the day shift bar, uh, and it will give us the new levels. So that's all about the strategy, uh, idea generation actually. Now it comes to us how to implement it. So the implementation is something we have found very hard in our strategies for a long time. So ideally, we are looking for prices to find support or resistances on the R3, R4, R5. Sorry, S3, S4, S5, or find resistances in uh, R3, R4, R5. So that's how our resistance and supports are defined, and we need to see the price go there and get resisted and come back, and then yeah, do whatever it does in, like, uh, other indicators as well. So the other indicators, how do you use them? So whatever divergences are happening which are not really close to any levels, any R3, R4, R5, or S3, S4, S5, are not important to us. So which are not important? Let's mark them in this chart. So this is not important. This is not important. This is not important. This may be important. This is jury still out. This is not important. This is not important. This is not important. Yeah. So all of these. Yeah, I messed up. So in this chart, these are non-important. You have to know what to avoid, what to reject, what to dismiss without coming back to us, because yeah, these are very straightforward. They are not near the level, they are not important. It's very strict rule. There is no two ways about it. It's a very clear rule that if the divergence is not happening at the key level, it's not important. So next thing to find is talk about this. So this is happening near the like your support level, but it actually hasn't tasted the support level. Let us zoom in. So neither of those bars have actually tested the support. So this is something you take into consideration. So it remains in the consideration. So let's find the divergence. Where is the divergence? It's here. So the price, yeah, price is down from here. No, I don't think so. Okay, so this is the divergence. So the price is actually down, but the RSI is actually up. So from this point to this point. Anyway, this actually doesn't test. So you keep this under advisement. So you keep this in the back of your head, but no decisions will be made with the help of this. In this case, it is not something that is giving a clear indication. So it actually doesn't matter. It is the same with these, but it does tell you that the prices might slow down and take the support on this area. Remember, it's not actually making the decision. It's actually giving you an indication to keep looking at it. So exactly like 45 minute 1 hour later, what is happening is the price is going beyond the level, and it is giving a complete mm, pull up on the engulfing candle on the next 15-minute bar. So at this point, so at this closing point is your entry. So at the close of this bar is your entry, which is at 22, 23, 21. And the bottom of this range is your SL, which is 23.18, 23.18. So you have a $3 or so, sorry, $4 or so uh, stop loss, and your target is firstly this one, which is 23.32, which is like $11. So that's fine. Now you stay in the trade. You don't get quicked out. You don't get hesitated. You don't get like there is no second way about it other than to hold through these periods, other than to be very strict in terms of monitoring, managing trades. You have a clear idea of what you want to do, and you have to follow through without being very shaky about your idea. So that's a period. That's a period. 2 periods are giving you difficult time to go through, but it's eventually going through to the upside. So now, what's up with this area? Let's go to this area. What is happening here? So what's happening here is it is on the first bar. It is getting resistance, but it's still closing above the and at a new high closing level. So you keep on following this. The next bar is completely breaking your level, so you keep watching. As long as you keep watching, you'll see that it is breaking through the R4 as well. So even at that R4 closing if, break, you don't close it. You only close when this is happening, this close happening, and that's your sell signal as well. So in this time, inside this 15 minute, you propose another trade. You propose another trade that we want to close the long position, open a short position immediately if this engulfs, because we are at resistance. We have a clear signal. Our RSI is at 76. Our volume is quite good. It's quite good, and it's almost at the average. It's not too huge like this one. It's not like that one. It's pretty average. So you can see the average line, right? So as long as it is close to that average line, that's good for the trade. That's good for the signal, because this is not being caused through exceptional amount of volume or exceptional amount of uh, influx in the market. So inside that bar, you can get that decision made, and you close your long, open a short on the neck close of the next bar. Your entry shifts to on the short side. Your entry shifts to 2335.5 or something, and your stop loss is the top of this bar, which is 2338.5. So again, $3 about that stop loss, and you see through your trade. You should get the R3 back, and as because it went below, could not close it, close below, immediately goes up. That's your cue to probably close it. Maybe even if you do not close in this bar, you get the chance to close at this bar, which is at 23 or 24, which is still $11 or so. So that's a good trade that obviously goes through some volatility here, which you need to uh, keep the trade true, and yeah, manage accordingly. That's the way we can trade these opportunities. Obviously, there are situations where we get more confirmation, like this one. This is better confirmation. We have a strong upside. We have a rejection. We have indecision. We then get a hammer with rejection from the R3. We get a MACD signal at that bar as well. Our RSI was at 75 plus. We are coming down. Obviously, this trade is going lower, but it would hit your stop loss at this 2337 bar, and then you'd lose $3. Doesn't matter. When this happens again, the next bar is happening, you might be inside, like the opportunity is there for you because it's closing above, it's closing below, but that's not a good trade because you have a huge 37 to 31 $6 bar. That's a week. Obviously your SL would be even higher at 2339. That's not good. You have to make that decision, like you have to make that observation. It's an $8 risk that you should not take, even if the opportunity might be good. The volume is also quite high. The average volume is what at this point? Let me check. So in your trigger bar, the in your trigger bar, average volume is 15K, whereas the volume is 24K. So that's almost what 67% higher than what it normally is. So yeah, these are the kind of things you need to keep tracking. You need to monitor on a regular basis, and yeah, that's the way we are gonna push through and find the key trading opportunities like this one. This one is an absolutely beautiful trade. This is happening. Yeah, this is pretty close to the volume. Average volume is not too big. 14K to 15, 14, like 19K. It's not that big of a difference. You are not being able to close. Let's see. You're not being able to close below for 3 bars. It's not being able to close below, and below. So at the close of this bar with the RSI, with the indecision, or maybe in the next bar, that's even better. You have your trade in this bar. You have 20, and this is 18 point something. So that's not a big difference. So $2 SL, and you trade this opportunity. You keep it, you get to 23 27. Maybe not at that, it's not getting this. You have a doji, you might want to close there. When you on a bullish trend, when you are taking a long trade and it's getting rejected with a doji, that's something you need to make sure you understand what is happening. Maybe get out, maybe close half at least, so that way we are still staying protected from moves like this. This is also 7:30. So after the market, US market open, this is happening. So these are the kind of opportunities we need to be taking. Also, let's look at the replay. So this is a pretty good example. I also shared this in the document. You're getting almost everything. So you're getting high from coming down from high RSI, which is not 75 but close to it. You are at R3. You are at MACD. You're getting a MACD divergence. Everything seems to be lining up. But why not take this trade? If you see the lower volume, so that's only 164 average volume like traded, 164 contracts, and and the current contract is 185, so that's pretty low, like with regards to the volume it there is generally. You can see, mostly during the volatile period of the day, it's at least 2 or 3 times better than that. So that's a bad signal for you. But it's not, even if you take this one, it's not really huge. It's triggering at 82.14, and your stop loss would be at the top of this, which is less than, see the highest points here, 26. So 12 pips of max risk at this point. Yeah, even if you lose it, doesn't matter. But that's something to keep in mind. That volume is very key in this. If the volume is rising when you're like you're still triggering into a zone, so you can see it falling. But if it's still rising when you're hitting a level, chances are it will break through. It should, when you are approaching a resistance or support, it should calm down. The peak being reached at the level you want to short or long. Similarly to this, this is a scenario on Euro USD. You broke the R3, you come down. Yeah, again, that's a huge bar. Wait. A lot of waiting here. It's from Thursday to Wednesday. Again, you get a clear kind of. Sorry, you're getting clear kind of rejection. So that's the point you might want to enter. Your volume is dropping. Your RSI is not conclusive enough that you are getting registered at that R3. Clearly, indecision, hammer, long bar, downside. You have a decent kind of SL at what, 8 9 pips. If you press pause, resume, it goes lower. Yeah, that's fine. Even if it doesn't go lower, you are fine too, because your risk was limited to a certain extent. In any case, the final thing on the US 30 area, which is happening on yesterday. But yeah, yesterday we are not still quite ready on what to do. But today we are. It's getting registered at that level, that R3 level. It's creating the MACD and RSI both. It's uh, creating an engulfing. It's creating. It's coming down from 75 almost, and that's your cue to enter. Obviously, it goes lower, almost $100 from your entry. Then you see all that volatility during the US market open. You might want to exit before that. If you do, that's still some profit. But if you don't, uh, it's going to take us out on the count of the SL. But there is another entry there. It does not close here. It's coming down from that level again, and that is another point we can enter. While the average volume is still quite high from that, you can see the average volume is coming down. We can see that it is clearly getting rejected there. You can see clearly that it is a kind of a big uh, inverse kind of hammer. And yeah, at that point there is another entry with a target of 39 to 17, which is obviously not reached. But in a kind of this kind of bar, it's still closing at 300, which is $70 or so. So we can try to enter those kind of trades as well, because the US 30 has very kind of fluctuating volatility. All day is not, there is not volatility, but the US session is terribly volatile. So there needs to be an adoption to that as well. So if you look at this part, it's getting rejected with a big doji. So if you don't enter there, we are not entering anywhere. But that's a big risk, because the resistance is $60 or $70 away. But in this case, that's better. The bottom case is better as well, but it's taking out the SL in the next bar. Oh, yeah, this is Saturday closing, so that's not a good entry at all. We have to know when we are entering as well. We cannot enter trades late in the closing period on a Friday. We cannot enter trades early on a Monday, because there is chunk volatility there. Like volume are coming in, new volume are coming into the market. So that's not a period to enter. That's a period to sustain through and look for opportunities in a better time. Uh, Similarly, to like add exact data points are not, let's say data is at 6 p.m. So the 5:45 bar, 6 p.m. bar, 6:15 bar, those are not the bars you want your trades to trigger. If they are triggering, avoid those trades blank. You don't know, we don't know what's going to happen. If the trade are triggering earlier than the bar, the data, that's fine. We take it. We maybe make decisions to keep it through the data point or something, but we do not take trades on exact data bars. So that's the idea we need to follow. I think that's about it on the whole thing. But there are examples on the document. There are examples here. There are examples live in the market as well. So if you find anything, if you have any questions, please let me know, and we'll discuss. We'll try to figure out. But this is uh, this is kind of the simplest way we can trade. There is no trend aspect to it. There is no breakout is happening, breakout not happening. There is no two ways about it. It's either hitting our zone or it is not. It's either getting resisted or supported there or it is not. Uh, so it's pretty simple. We are keeping it pretty simple, and that's the way we want to go forward. Yeah. Thank you.